now we're going to finish with two of the most interesting people in the space entirely, and I'm sort of really grateful that Fred's found the time. I know the schedule is ridiculous. I see you on TikTok, Fred, and you don't have a lot of time. You're always doing something at a super quick clip. And Leigh, who's running Binance Australia, doesn't have any time either. So I'm grateful that you've graced us with your presence here as the big finish on what has been a big day, and I welcome you both on stage.
Thank you, Fred, and thank you, Steve. So firstly, representing Binance Australia today, I'm CEO of the local operations here. We're a compliant and progressive Australian fintech, enabling our customers and corporate institutions to access low-cost digital asset products, and certainly very proud to sponsor here today for Blockchain Week, and what has today absolutely lived up to expectations. So thank you to everyone that's presented today, and for all the enthusiasm and interest that we've seen online. Certainly I'm very happy that Binance Australia sponsored as well to give me the opportunity to speak to someone like Fred today. I definitely had, one of the most enviable positions, I think, getting to have a chat to you. And one thing I found, just doing a little bit of investigation about you online, seeing that you've been in the podcast game, you've been interviewing a lot of really, really successful entrepreneurs. So I want you to imagine that I'm a super successful entrepreneur. I'm Elon Musk. I'm Zuckerberg. What do you do? What is it that you do for business, Fred?
Wait, so you're Elon?
I'm Elon. And you're telling me what you do for business. Describe to me about what you do in your business life.
Oh, right. I break things, and then I put them back together and make them better for people. I'm the one who says yes when everyone's saying no. I bring consensus. I sometimes am very demanding. That's a nice way of putting it. And I push the evolution of humanity forward as best I possibly can. I try and do the things that people say are impossible, and I make them possible for Australian people. As best I possibly can, and I've been talking about crypto for a long time, and I think this is a crucial thing, and it's something I believe in. I've got a few topics I really want to talk about, Leigh. Is that okay?
Please, bring it on.
Okay, I want to talk about something in the room right now in crypto, and this is off the cuff, so if everyone can just roll with me on this, Leigh, just come with me. I want to talk about stablecoins. So stablecoins, I think, are probably one of the most important things and one of the hottest things I'm looking at right now. And what I think the future is going to look like is this. I think there are going to be multiple currencies in Australia issued by banks, backed by Bitcoin. And there are going to be certain percentages of Bitcoin. Some will have less Bitcoin, some will have more. And that is because if you go back to 1694, when King William III actually created the Bank of England, there were multiple currencies actually going all around England. And in fact, right now, if you go to Hong Kong, there are multiple currencies that are issued by different banks. I don't know if that's still the case, but when I was there, it was. And the decentralization and competition of banking and free banking was actually prevalent, and people used to use money supplies in their local areas. And this was normal. And so what's about to happen is we're about to go into a phase of multiple issuances of our currency. Now, this sounds insane, I know, slightly, but actually, during that time, there are many papers that have been written, and it was only in the 1800s that, through the Peel Act in England, that the government forced everyone to use the Bank of England's currency. Prior to that, many currencies were in circulation. So I just want to put to bed this discussion about, there's multiple cryptocurrencies and which ones do we use. That's actually the normal state. And we need to move past that whole idea. What I think is more interesting is, I'm just riffing a little bit, Leigh, but these are the things I've been really thinking about and I want to share with everyone, is I think Bitcoin is a fascinating asset. And the reason why it's so fascinating is because I think it's the most neutral. And what do I mean by that? That every tribe in cryptocurrency right now, if everyone, if you sort of think about all the coins and different ones and blockchains, and everyone's cool with Bitcoin now. No one's like fighting Bitcoin. Everyone's like, well, Bitcoin's awesome because it's going up and everything goes up. So everyone likes Bitcoin. It's the most tribally neutral currency that currently exists. And because of that, I believe that stablecoins are going to move to greater and greater percentages of Bitcoin holdings. And I also think that banks, or the first bank, I don't know which country will do this, but they'll start to issue coins backed by Bitcoin. And I think we're going to see that fairly soon.
So you're talking here about central banks holding Bitcoin.
I'm talking about commercial banks issuing their own currencies. So the Bank of England lent the government money when it got into trouble. Actually, it lent like when they needed to go to war. And it was one of the banks that everyone's like, it lent money to the government. And other banks were doing this as well. And if you did this, you got special privileges that you got to issue the notes. And so if you go back in time, right, so everyone's going to be issuing notes, all these banks. You can have an ANZ $100 bill. I shouldn't say that, but or a NAB one or a Combank one or a Finder one even. Or a Binance one, which already exists.
We've got that.
So this is the natural state of what our world's going to be like. And what I'm trying to submit is that I think we're actually about to come to that confluence, right, like very soon.
Awesome insights into history and what the future of money looks like. But more from a business perspective, how are you thinking about this current sort of Web3 climate, where we're going, and making some strategic investments? Clearly, you've been able to build up a bit of value, for the business personally recently. Where are you sort of looking to invest that to sort of capture some of this foresight you have around markets and Web3?
Yeah, so I've been thinking about Web 2 and Web 3 of recent, and I think Finder was a Web 2 business. And the way in which I sort of think about that is Web 2 businesses are ones that sort of advertise or do a lot with Facebook and Google. If you do a lot with Facebook and Google, you're a Web 2 business. If instead your business is powered by 1, community, and 2, product, then I think you're a Web 3 business. And so what Finder's doing is we are evolving into becoming a Web 3 business. Obviously, we started as a Web 2 business. So we launched our brokerage business, which is inside the Finder app. We launched Finder Earn, where you can earn 4% on your capital. And these are very, it's only available in our app. And so the challenge from a business perspective is, and I could imagine some of the CIOs that were on here before and even bigger organizations, is how do you change? How do you change as an organization? And Finder as an organization is changing right now. And I think the difference is that, we were sort of sending envelopes in the mail and now we're becoming a streaming service, if that makes sense. We're in this transition phase. It doesn't look like it, and you'll see a new brand coming with Finder fairly soon. But that's been a very challenging and upheaval and tough time for us. We've had to, there's many, many different challenges with that.
Interesting. So you touched there a little bit on change and managing an organisation. And we heard from Joe Lubin before around how fintechs are becoming like culture tech firms. You need to be on top of pop culture to stay interesting, to attract the new generation of customers. How do you think about that within Finder and your business in terms of, staying on trend, being cool and attracting customers?
Well, I think Finder isn't, traditionally seen as a cool company, unfortunately, or wasn't. I think it's okay. I think it's kind of cool. We try and be cool. Actually, we don't really try to be cool. We just are. Anyway. So, I think one of the things, but let's go back. Okay, what's the business thing here is when markets move and industries change, what Finder does extremely well is adapt. And if you look at sort of economics theory, pretty much every economics theory is broken. It doesn't actually work. Instead, what I think is better is to apply biology to trying to work out. Basically, economics tries to go, what's the future going to be? And all the models basically don't work. And instead, I reckon if you look at biology, nothing in biology, none of us are actually any good at predicting the future. We're very useless. And instead, what we're really good at is one thing, and that is that we know in order to survive for the future is we need to adapt. And Finder's, I guess, premise and what it's really good at, so its third value at Finder is to go live, which means we have a bias to putting things live on the internet, sometimes a little too fast, probably way too fast. And then on the other side, because we're really fast and the culture is built around that, we're really good at adapting. So during COVID, our credit markets, so that we compare credit cards and mortgages and personal loans, they basically, and our travel business, travel insurance business, we actually shut that down, just completely went and packed up. So what did we do? We adapted, and so obviously we were already writing about cryptocurrency and stocks. We really that started to grow. We actually started writing about face masks. Now I know that has been big, which is a big business for us. Which we took it to the US as well. We adapted as well, and we started writing about rat tests because they were really big recently. And but that adaptation and that ability to continuously adapt and evolve, Finder doesn't see itself as a unicorn company. We see ourselves as a phoenix. Is continuously reinventing ourselves and continuing to survive and endure. We're not trying to become a unicorn. We're trying to last forever.
Awesome. Now, just sort of touching on, where I'm seeing a bit of an interface with your business, incentivizing users to, review different platforms that you have and the offers that these businesses have specifically. The incentive model is just such a big focus in Web3. I want to know a little bit more around where you're seeing incentives for Australian customers. Just generally, do you think there's a genuine interest in Web3 and sort of incentives around getting access to be an ownership economy? Or do you still think, giving away $10 or giving away something more tangible like a face mask or something like that is going to attract eyeballs and users?
So I'm an old school direct marketer, like a real stodgy one. I love like steak knives and late night TV commercials and back of TV, magazines, and I love all that stuff and the Reader's Digest. And what I was trained in, so I come from that background, is there are things which are sort of ever present in humanity that humans love. And one of them is free money. Humans love free money. Free sex is pretty good as well. And the last one, free beer. So if you highlight some of those things, you tend to get a lot of interest. I think when it comes to offers, but if you're discounting your product, I don't think, and that's what's bringing in your customers, I think you're sort of heading towards the end of your business. You want to build a customer base that essentially is there for your actual product eternally and not just come for the discount. Because if they just come for the discount, they're only going to stay for the discount. So what I try and think of, and what I've always, my principle has been to never discount, is to earn the customer. And what I think is if you took that discount instead and put it back into 2 engineers and a product manager and added to the features of the product, hopefully that'll add more value to the customer and you won't have to discount and you'll actually earn that customer base. That's sort of my lens of, I'm a terrible promotions. I don't think in that way.
I think that's a complete lie, Fred. I think you're one of the best at promotions I've ever seen. I think that $10 giveaway, I think it was, when the vaccine mandates came through.
Oh, yes.
And it was something that everyone had to do. And you said, well, we're happy to give $10 out to anyone that does get the jab. And that sort of level of virality.
That's true. You got me.
Yeah.
I'm caught. I was bored and everyone was at home and I went on Kyle and Jackie O's show and I was having with Kyle and I was like, I got to say something insane right now. I said, all right, I'll give everyone in Australia $5 if you get vaccinated. And they published that and we published that and it went live. It went pretty crazy. I don't know if those customers stuck around or not, but it was a good headline.
Very nice. No, definitely hearing from other exchanges and other businesses that they all shook their heads and like, we're already doing this. We're giving this away, but yours, with the timing, took all the headlights. So clearly there's a gift to marketing. But I want to touch on one thing, Fred. You know, you've got the cool shoes, looking good. You've seen your new house online. That's one of the coolest looking houses I've ever seen. Metaverse. What do you think is cool in the metaverse? Do you think it's owning digital horses? Do you think it's a punk? Where is cool in the metaverse for you, and what do you want to do in that metaverse?
So, and I just want to talk about how do you be cool in the metaverse and why is being cool, if I can just contextualize a bit. So when I think about this, I think about atoms and I think about electrons. So let's say if I'm wearing a fancy watch, which I'm not wearing a fancy watch, but if I was wearing a fancy watch, in the world of atoms that we're in right now, you'd think I'm pretty cool, but yeah, I'm not wearing a fancy watch. So what's a fancy watch in the metaverse? I do think, there are certain NFTs, like the Bored Ape Yacht Club is just crushing it. I would put the Bored Ape Yacht Club at giga hype. Like anything that touches goes insane. It's that hyped up. I was at NYC NFT, and it was like there were parties you could just not go to. I just couldn't go. It just doesn't matter how you wear your hair, no matter what. It's just you can't go. And the blue ones and all this kind of stuff, I think those things are cool. I think you're going to see all sorts of other different types of things that are going to be digitally represented. I don't know what those are. I think this is like the crypto kitties version right now of these communities and things like that. There are a lot of scams that are also coming out, unfortunately. We need to get past that phase, that was like, 2018, 2019 was when that sort of dredged out. And so I think you're going to see this dip in NFTs for a bit, and then you'll see the Amazons and the eBays and the Googles start to come out. I think the Bored Ape Yachts are like proper giga hype. Like that touches anything you're involved with. It is just mega like instant. I don't even know what the word is. Giga hype is the word I would give.
I've never seen anything like it online, just in terms of that speed of adoption, that community they've been able to attract.
$138 million in revenue, $132 million in profit. I'm not sure of a business that does that kind of numbers. And they're forecasting, I think, $500 million in revenue and profit next year.
Yeah, me and Fred are off to Dubai next week for the World Government Summit. There's a Binance component to it as well, which is pretty huge, and I'm feeling a bit nervous walking in without a Bored Ape Yacht Club. Yeah, it's going to be a bit awkward for us.
Actually, was in NYC NFT, and there was a guy on stage wearing his NFT as his face. So it was digitalized. I saw C-Phrase as well. C-Phrase is a good guy. I was hanging out with him. But he does his DJ stuff with his NFT on his face. But this person gave his talk the entire time with the digital face and never showed his face. And he's got a whole portfolio of photos of people, and he represents that is like him. And he's continuously adding value to his NFT and his digital representation of his identity. And I think this goes to identity, right? So, we've all got multiple identities. We have an identity to the government, we have an identity to our bank, we have an identity to our friends, we have an identity to our, partner. We show different things and we like to reveal different things. And in this case, this person has fully taken the embodiment of this NFT and now created a whole life around it.
It's interesting in terms of, how much interest that has and how much value that's generated for a business. But how do you value these NFTs, and how do you value cryptocurrencies generally? Is that something you're thinking a lot about, or you're more just building businesses and getting on with stuff that you like to do?
Yeah, so I just think that's another great question, and it's something which I just keep hearing, and again, if I can slightly riff, it's like I can value stocks, but I can't value cryptocurrencies. So I just want to put this to bed, because this is let's be done with this conversation. Discounted cash flows only came out in 1960, the valuation of companies. We were only adopted by courts in 1980. So that discounted cash flow whole theory of that of valuing companies is only actually relatively new. So we only just figured that out. And now cryptocurrencies, who've been around for 11 years, we're going, well, what's your discounted cash flow theory? And it's like, okay, guys, chill. We're just figuring this out. So one thing I just want to flag, what happens is, I think if we change the paradigm of when we look at cryptocurrencies and traditional finance, I think there's something really important. I get these moments in time, and I think this is important, when some people are like asking these questions, like, how do you value this? What's actually happening is they're going, I've got my model I was taught at university, and I've grown up, and I've conducted life, and I have a system, and I understand how these things work, and I know how to value them, and I know how to do my job, and that job allows me to conduct my, gain income and build my family and create wealth. Now, can you tell me the system that you're involved with? That's essentially the conversation that's happening. And it's like, well, I don't understand your system. It's like, cool. All right, well, let's come over the other side now, and let's have a look at this new system, and we'll teach you. And I think this is what this conference is about, and what Steve has put together here, and all the team at Blockchain Australia. So I just thank you for what everyone's doing here, and all your participation for everyone here. Like, big ups. This is like, we are creating another financial system, right? People's lives and their wealth, they're going to feed their families from what we're doing. So I want to talk about two things, if I can. Leigh, again, I'm slightly riffing, and I appreciate you giving me the chance. I think there are two things in crypto that we're going to start to value, and that are, one, community, and two, the actual utility of the product. Those are going to be the two value criteria in which I believe a discounted cash flow model is going to be created around. So let's have a look, talk about community. It's about two things. One, obviously the activity of it, but the actual distribution of the community. How many wallets does this coin have, and how many wallets are active? That's going to be a core metric that's going to feed into a model. I'm not an economist, and I'm not an analyst, but these are some of the things I reckon there are really smart people probably in this room, or you have in your team, that could probably crack this. I guarantee you work out the first discounted cash flow, and someone will write a book about it and create the history, and they'll create a Wikipedia and stuff about it. So the community, right? That's the first thing. Because as the community grows and the scale of the coin grows, more people want to hold it, and more people, because they hold it, there's less supply and the price goes up. Pretty simple stuff, fundamentally. I'm sure there's some analysis around this. Two, usefulness. I believe there needs to be a factor or some sort of metric that will need to be invented, and I don't know what this necessarily is, around the utility of a coin. And as its utility grows, and I'm going to riff a little bit, I think the Binance coin is a great example of that, right? No, this is not, Leigh has not paid me any money. I don't own Binance. Not yet. Yeah. But let's talk about the moment in time, if everyone remembers, when Binance was just an exchange coin and then became a chain. Its utility went up. Therefore, its valuation went up. Right? So there's clearly, here are two distinct metrics which can determine the value of a cryptocurrency. Now, my challenge back to everyone here and everyone else whoever asks you that question, is work out the model from that. Those are the two things. I don't know how to calculate that, and I'm not that smart, so to figure that out, but there are really smart people that would do that.
Some of the parts valuation, I think.
Right, some of the parts, you put that together, and I bet you could probably come up with some sort of model. And then super funds will start to have those models. There'll be analysts inside those super funds, and they'll go, oh, I understand how to discount cash flow, or cryptocurrency cash flow, or sum of parts cash flow, work out this thing, community product cash flow. Yep. I'm just riffing now.
Let me get the calculator out.
Yeah, just a minute.
I've got one. I'm getting the nod from Steve, and everyone else has been quite good at listening to him, so I'll do the same. I've got one more question for you, and I think Fred established earlier that Bitcoin unarguably has a lot of value and will in the future. So that's done, and in terms of that having a use case, that's the hedge against governments printing money irresponsibly. If you're worried about that, governments printing irresponsibly money, go buy some Bitcoin. Now, on the other side, if you're worried about the future turning entirely digital, going full metaverse, your physical presence, your physical reputation going out the window, what would you advise people here today to do to start getting a digital identity in terms of building up some social value, some digital value, some personal value for themselves online?
Well, that's a great question, Leigh, and you constructed that extremely well. And I do think there is equity in digital presences. It's a very obscure question, and I love it, by the way. So I think there are, a number of different things that combine together to someone's social equity. Association is one. So who are you associated with? This goes back to old tribalism to some degree. I think if you were going to start to create equity, I think creating content is probably step one. And what do I mean by that? You find the channel or the medium in which you can communicate your ideas and start to publish those in some way, shape, or form. I'm pretty bad at dancing, so I don't dance on TikTok, but that doesn't mean I can't create TikToks. And I obviously, talk about my things that I want to talk about and I can talk about, but that is part of a form of identity. I think the other thing is to choose the location in which you socialize. Now, I want to talk about, if I can, just briefly, two different venues. One is Twitter and one is LinkedIn. And there's something very, very interesting I find about those two different platforms. LinkedIn is, I think, a very interesting place because it's clean and well lit. And what do I mean by that? Is when you go on LinkedIn, people know who you are. It's a clean place. Now, on Twitter, but you can essentially be anonymous. It is not a clean and well lit place. There are places where it deteriorates to some degree. And my submission to you is, in your digital identity, you may take, you might have burner identities and things like that, and some people do. I'm personally not terribly good at that. I just be myself, and I'm doing an okay job of doing that from time to time. And so I think choose the platform which you want to be and you naturally feel comfortable with. I think that's a better thing to do and a better approach to create equity in your digital identity. So, again, some people want to be very public and some people want to, put themselves out there. I think a clean and well-lit place is probably better. I think when you are trying to be anonymous or, maybe you can handle that as well emotionally, then Twitter and places like that is probably better for you. And I think those kinds of profiles and thoughts where you sort of collect those, it's not just the people you hang out with, it's where you hang out. And I think that's another sort of thought starter.
Thank you, Fred. And thank you to Steve, Blockchain Australia, and all the sponsors today for what has been a truly fantastic event.
Thanks very much.